2025 is officially over, and Wall Street just pulled off something that very few people expected. Despite inflation fears, interest rate chaos, trade tensions, and nonstop warnings about an AI bubble, the US stock market just closed the year with double-digit gains across nearly every major index. So how did stocks rise this much? Who actually benefited? And more importantly, what does this mean for investors heading into 2026? Stick around because by the end of this video, you'll understand why this rally surprised even professionals and what could break it next. And before we jump in, if you want clear, no hype market breakdowns like this, make sure to subscribe and turn on notifications. Let's get into it. Let's start with the numbers because they matter. The US stock market wrapped up 2025 with strong double-digit gains, even though the final trading session of the year ended slightly lower. The S&P 500 finished the year up around 16%, reflecting broad strength across corporate America. The Nasdaq, driven heavily by technology and AI stocks, surged close to 20%. The Dow Jones Industrial Average climbed more than 13%, showing that even traditional blue-chip companies participated in the rally. That's not just a good year, that's an exceptional one. And here's the key detail most people overlook. This wasn't a straight line upward. 2025 was volatile, emotional, and filled with moments where markets looked like they were about to fall apart. If you felt stressed watching markets this year, you weren't alone. Early 2025 was dominated by inflation concerns, uncertainty over Federal Reserve policy, and renewed fears of economic slowdown. Then came the shock. In April, markets experienced a sharp sell-off after new US tariff announcements triggered panic about global trade disruptions. Trillions of dollars briefly vanished from stock valuations. At the same time, critics began warning that the massive surge in AI-related stocks looked eerily similar to past bubbles. Investors were stuck asking one question over and over again: is this the top or just another dip? Yet, despite all that fear, markets stabilized and climbed higher. So what actually pushed stocks higher? There were three powerful forces working together. One, corporate earnings stayed strong. First, earnings. Despite all the noise, many US companies delivered solid profits throughout the year. Consumer spending didn't collapse. Businesses adapted. Margins held up better than expected. As long as companies keep making money, stocks have a foundation to stand on. And that's exactly what happened. 2. Federal Reserve rate cuts changed the game. Second, interest rates. The Federal Reserve began cutting rates in 2025, easing financial conditions. That matters because borrowing became cheaper, investors moved money out of bonds, stocks suddenly looked more attractive again. Lower rates don't just boost stock prices, they boost confidence. And confidence is fuel for markets. 3. AI wasn't just hype, it was a theme. And third, artificial intelligence. AI wasn't just a buzzword in 2025, it became a dominant investment theme. Companies tied to data centers, chips, and cloud computing exploded higher. Some of the biggest names in AI gained 30 to 40% or more in a single year. Whether you believe AI is overhyped or revolutionary, one thing is clear: it drove market momentum in 2025. Here's a stat that really puts things in perspective. The US stock market just delivered 3 consecutive years of double-digit gains. That doesn't happen often. Historically, extended winning streaks like this are rare, and they usually lead to one of two outcomes. 1, continued growth fueled by innovation and earnings. 2, a painful correction when expectations get too high. Which path comes next is the question everyone is asking right now. So let's talk about 2026. On the positive side, rate cuts support growth. Corporate earnings remain resilient. Technology continues evolving rapidly, but risks haven't disappeared. Valuations are elevated. AI expectations may be stretched. Trade policy and geopolitics remain unpredictable. This doesn't mean a crash is guaranteed, but it does mean discipline matters more than ever. The days of blindly buying anything and watching it go up may be behind us. 2025 proved one thing very clearly: markets can rise even when fear dominates headlines. But smart investors don't chase hype. They study cycles, risks, and momentum. If you want clear, honest market analysis without the noise, make sure to subscribe, hit the like button, and turn on notifications so you never miss a breakdown. Thanks for watching, and I'll see you in the next one.